In this video, we talk about the housing market explained. Buying a home used to be simple. You worked, you saved, you bought a place to live. Today, that same dream feels completely out of reach. And it's not because people suddenly became lazy. It's not because everyone stopped budgeting. And it's definitely not just inflation. Something deeper is happening. Something structural. Something most people were never taught to notice. And once you see it, you'll understand why housing feels broken, even though technically it's working exactly as designed. Pause for a second. Think about this. How can an entire generation work more, earn more degrees, and still struggle to afford shelter? That question alone tells us this isn't a personal failure, it's a system story. And that's exactly what we're unpacking today. For decades, housing had one main purpose: shelter. A place to raise a family, a place to rest, a place to feel stable. Prices went up slowly, wages kept pace, and most people assumed homes would always be accessible. Then, something changed. Quietly, gradually, almost invisibly. Housing stopped being just a place to live and started becoming a financial asset. At first, it didn't look dangerous. People bought homes. They gained value. Everyone felt richer. But here's what nobody tells you. The moment housing becomes an investment, its goal changes. Shelter wants stability. Investments want growth. And growth doesn't care who gets pushed out. Let's talk about supply and demand, because this is where the story really starts. Cities didn't suddenly run out of land. People didn't suddenly start having 10 kids each. But zoning laws stayed tight, construction stayed slow, and new housing lagged behind population growth. At the same time, demand exploded. More people wanted homes. Investors wanted homes. Corporations wanted homes. And when demand rises faster than supply, prices don't gently increase, they jump. This is basic economics, but the consequences are very real. Every year you wait, the entry price moves higher. And if you're already inside the market, you benefit. If you're outside, the door slowly closes. Now let's bring in the banks, because banks didn't create the housing shortage, but they learned how to profit from it. Mortgages became financial products. Homes became collateral. Debt became scalable. As long as prices kept rising, risk felt low. Money flowed easily. Low interest rates made borrowing cheap. Cheap borrowing pushed prices higher. Higher prices justified more borrowing. It became a loop, and loops are powerful. But here's the twist. This loop only works as long as someone new keeps paying more. That someone was supposed to be the next generation. Meanwhile, wages didn't keep up. Housing doubled, rent tripled, paychecks barely moved. So people adjusted. They rented longer. They delayed families. They moved farther from cities, and many blamed themselves. I should have saved more. I should have bought earlier. I missed my chance. But here's the uncomfortable truth. You didn't miss the timing. The timing moved away from you. Then came the next phase: corporations. Large firms realized something powerful. Buying one house is slow. Buying thousands is efficient. They could pay cash, outbid families, close instantly. Entire neighborhoods changed hands, not to people who wanted to live there, but to balance sheets. And this is where it gets insane. Once a corporation owns the house, it never needs to sell. It can rent it forever. That turns housing from a one-time sale into a permanent income stream. And permanent income is incredibly valuable. So prices rose even more. Not because people could afford more, but because investors could. At this point, regular buyers were competing not with neighbors, but with algorithms. Software deciding how much a home is worth, software deciding the rent, software optimizing profit. Human needs didn't enter the equation, only returns did. And this is when the market truly separated. Owners gained equity, renters gained bills. One side accumulated wealth, the other funded it. You might ask, where was the government? That's a fair question. Regulation moves slowly, markets move fast. By the time rules are debated, systems are already entrenched. Some policies helped investors, others failed to stop consolidation, and many governments relied on rising home prices to make voters feel wealthier. So intervention stayed minimal, not because no one noticed, but because changing the system meant upsetting people already winning. Now let's zoom out, because this isn't just about housing, it's about psychology. When housing becomes expensive, fear enters the market. Fear of missing out, fear of being left behind, fear of renting forever. Fear pushes people to stretch budgets. Stretched budgets increase debt. Debt increases risk. But risk feels normal when everyone else is doing the same thing. That's how bubbles form. Quietly, socially, convincingly. And here's the most important point. The housing market isn't broken. It's optimized, just not for affordability. It's optimized for asset growth, for leverage, for capital accumulation, which means the pain you feel isn't accidental. It's a side effect of incentives, and incentives drive systems. So what does this mean for you? It means understanding matters more than timing. It means blaming yourself less and analyzing the system more. It means realizing that renting isn't failure and owning isn't guaranteed success. It means decisions should be strategic, not emotional, because emotional decisions are exactly what expensive systems rely on. Housing will always matter. Shelter is fundamental. Stability is human. But markets don't protect fundamentals. People do. Policies do. Awareness does. And awareness starts with understanding how the game is actually played, not how we were told it works. The biggest lie about housing is that everyone had the same opportunity. They didn't. Early access changed everything, and pretending otherwise keeps people confused, frustrated, and blaming themselves. If you take one thing from this video, let it be this. You're not imagining it. Housing really did become harder, and the reasons are structural, not personal. Understanding the system won't instantly fix it, but it gives you clarity, and clarity is power. If you want more videos that break down money, systems, and economics in a clear, simple way, subscribe our channel for more videos.